tax evasion is a big problem in the United States. In fact, according to the Treasury Department report released earlier this month, the wealthiest Americans are failing to pay as much as $163 billion per year in taxes. Okay, they're not making those tax payments. And just recently, a famous YouTuber named the Hellcat with over 800,000 fans was just arrested for committing tax evasion and could be going to prison for a very long time. And now many people are actually afraid that if they make a mistake on their tax return, that they could be audited by the IRS and maybe even go to jail. So in this video, what I want to do is clear up what tax evasion is, who goes to jail for it, and a lot more. Stay tuned. So first off, number one, what is tax evasion? Simply put, it is an illegal. And illegal means to avoid paying taxes. In my definition, it is when someone is intentionally lying or misrepresenting their income to the IRS. Now, on this channel, of course, we talk about all the time how to avoid paying taxes and all the tips and tricks that you can use. But those are always legal options and are spelled out in the actual tax codes. We would never ever tell you to do anything illegally. Furthermore, it is usually the people who are involved in illegal operations that are found guilty of tax evasion. Because of course, if they report illegal income on their taxes, then that would basically be an admission of guilt, basically exposing their illegal operation. So they don't report their illegal income, and that is tax evasion. But just because you do have a legit income or business operation doesn't mean you're completely safe. You still need to make sure you're reporting everything correctly to the IRS if you don't want to be suspected of tax evasion. But let me help put your mind at ease for just a second. Because here's the truth, okay? Very few people actually go to prison for tax evasion. In fact, according to the tax evasion statistics in 2020, there were 1,598 investigations of tax crime. And in 2019, there were around 1,500 cases again. So let's go ahead and do some math together really quickly. There are roughly 1,500 cases and then roughly 150 million taxpayers who have legit and legal income sources. So that means that less than 0.0001% of people actually go to prison for tax evasion. Now, by no means whatsoever does that mean tax evasion is okay. In fact, the IRS is trying to increase their staff and monitor stuff like your bank accounts to catch even more tax evasion. So do not do it. Now, moving on to number two, what triggers tax evasion? But really quickly before I do, if you're new to the channel, hey, I'm Sean with Life Accounting, the accounting company that saves people from high taxes and low profits. If you are getting any value from this video, even an incy-wincy bit, everyone at our firm would greatly appreciate if you hit the like button for the YouTube algorithm. It really helps this video reach more people like you who need to learn about tax evasion. Did you do it? Why not? Come on. Okay, thank you. All right, moving on to number two. What triggers tax evasion? So let me go ahead and lay out the process for you. So the first thing that happens is that the IRS will conduct what is called an audit, which is usually triggered by some type of letter, which of course begs the question, what triggers an audit? Well, there are many things that can trigger an audit, but most commonly it would be any suspicious errors. So for example, a really large charitable contribution that exceeds more than 50% of your reported income could trigger an audit. But an audit doesn't necessarily mean that you are guilty of tax evasion. So then what of course triggers tax evasion? So when it comes to legal sources of income, there are two big things that the IRS is generally on the lookout for. Number one, unreported income. This is basically any income that you do not report on your tax return. So for example, if you have a side business or some type of side hobby where you're making money and you do not report that on your taxes, that can trigger a tax investigation of tax evasion. Or as another example, if you sell something like a rental property that is a non-primary residence and you do not report the capital gains, that can trigger a tax investigation as well. Now you're probably wondering, Sean, how does the IRS know I didn't report my income, especially if I pay using cash? Well, the IRS can see some things that you cannot, which I'll talk about in just a second. But first, let me mention the second trigger for tax evasion investigations. Try saying that 3 times, right? Which would be if you intentionally make false statements or you are intentionally concealing records such as your bank account. So this is usually like the nail in the coffin when it comes to tax evasion, because the IRS is generally understandable when it comes to errors and honest mistakes on your tax return. But if they send you a letter and instead of you coming clean about your potential mistake, you instead intentionally lie about your income or lie about your deductions, then that is a clear-cut reason of why you may be suspected of tax evasion. So if you get an IRS letter, you're already in hot water and you need to be as accurate as you possibly can and corresponding with the IRS, unless you want to go to jail for tax evasion. What? No. All right, so number 3, how does the IRS catch cheaters? Right? Like what evidence does the IRS have to prove that you did not report a specific amount of income? Well, here's the thing, okay? Your income is usually someone else's deduction. Let me say that again. Your income is usually someone else's deduction. Let's break this down with an example. So for example, let's say you have a side hustle and you get paid as a contractor. Well, the person or the company that paid you will want to write off their expense on their taxes to, of course, legally reduce their taxable income. So that company will report the contractor expense to the IRS on their tax return and then hopefully give you what is called a 1099 miscellaneous form with the exact amount you receive to report on your tax return. Okay, can you start to see the dilemma or the check and balance here? If the IRS looks at a tax return and they see a deduction on someone's return, the IRS would expect to see income on another return. So it's kind of like a check and balance system that the IRS has that you may not be able to directly see. Even if you are paid in cash, someone would still likely report that, and they should report that on their tax return to get a legit and legal deduction. And if the IRS asks, okay, who did you pay this money to? Of course, that person will point the finger back at that particular contractor or employee. So of course, that's in the case of unreported income. Now, if you take a deduction, of course, and you cannot substantiate that deduction, like you don't have any proof of payment, then that of course is an obvious sign that you are trying to avoid paying taxes illegally as well. Now, number 4, what happens if you are guilty of tax evasion? It's probably obvious by now, but you are going to prison. But not only are you going to prison, but you are also going to have to pay back all the taxes you owed, plus a 75% fraud penalty. So the moral of the story here is prepare your tax return as accurately as possible, the right way, and don't try to avoid paying taxes illegally. Now, coming up next, we have some great videos that break down what triggers an IRS audit, what to do if you get an IRS letter, and some more tax avoidance strategies. So make sure you watch the video somewhere over here or click the playlist button below in the description to learn more about the tax law, and we'll see you over there.